All right, let's get right into it because the crypto market is giving us a lot to talk about over the holiday table. Bitcoin just smashed back above $90,000. So the big question we're tackling today is this. Is this the real deal, the start of a recovery? Or is it just a bull trap before the next leg down?
And for all of our US viewers, a very happy Thanksgiving. It really feels like the crypto gods decided to serve up a nice little pump to go along with the turkey, right? The whole narrative, the whole feeling in the market has shifted almost overnight from total despair to this little glimmer of hope.
And this number right here, this is what's driving all of that hope. $91,890. That was the intraday high that Bitcoin hit. It's the move that officially reclaimed that massive psychological 90K level. And yeah, this is what has everyone talking.
So let's dig into this a little bit. Let's break down the positive price action that's fueling all this optimism. What does this Thanksgiving pump actually look like on the charts?
Well, the bulls are absolutely carving the turkey right now. I mean, not only did we get back above that key $90,000 level, but we've seen 4 green days out of the last 5. You know, that's the kind of consistent upward move that signals the recent brutal sell-off might have finally found its bottom, at least for the short term. The bears who are shorting those lows, they are really feeling the squeeze today.
But it's not all clear skies and smooth sailing from here. For every bullish signal we're seeing right now, there's a pretty good reason to stay cautious. This is a story of hope, for sure, but it is absolutely laced with fear.
And this chart really shows you that dramatic shift in sentiment. The Crypto Fear and Greed Index has literally more than doubled, jumping from a rock-bottom low of just 10 last week all the way up to 22 today. That's a huge improvement, and it shows that confidence is slowly but surely starting to creep back into the market. But here's the crucial piece of context you can't forget. Yeah, the number jumped, but a score of 22 is still planted firmly in the extreme fear category. So while the momentum is pointing up, the market is very, very far from being greedy or euphoric. You could say the bleeding is stopped, but the patient is definitely still in recovery.
And this number, negative 16%, this is exactly why that fear is still lingering. Despite this fantastic bounce, November is still on track to be the worst month for Bitcoin since 2022. The price is still down over 16% month to date. This really puts everything into perspective, right? What we're seeing is a relief rally happening inside of a much larger correction.
So if it's not just pure market euphoria, what's actually driving this recovery? Let's dissect the anatomy of this bounce and really look at the technical reasons behind the move.
Okay, so the main driver here is purely technical. The market just got stretched way too far to the downside. Key indicators like the Relative Strength Index, the RSI, which basically measures how fast and how much prices are moving, it plunged to historic lows. And when you look at the on-chain data, which is tracking activity right on the blockchain, you see the kinds of oversold levels that have, in the past, marked major market bottoms. This bounce was, in a lot of ways, just overdue.
And hey, you don't have to take my word for it. This view is being echoed by analysts all over the place. Michael Van de Poppe pointed out that based on some of these on-chain indicators, we hit the most oversold levels in Bitcoin's entire history. He frames it not as a time to panic, but as a prime opportunity for exactly the kind of fast recovery we're seeing right now.
But for the sake of balance, not everyone is convinced this is a rocket ship straight back to all-time highs. A panel from CoinShares is suggesting that we should see this more as a reset phase. In their view, the market needs time. It needs to cool off, build a new stable floor, and really digest all this volatility before making a serious push for new highs. So, the recovery is real, but it's fragile. So, where does that leave us for the immediate future? With the Thanksgiving holiday happening in the US, the next 48 hours or so are looking like a bit of a coin toss. Let's explore how this could play out over the weekend.
First, a really important warning. Holiday trading volume is notoriously thin. Fewer traders, fewer orders in the market, and that can lead to some wild, unpredictable price swings. A single big order can move the price way more than it normally would. So just stay sharp out there.
So, based on the current setup, our source material is putting about a 60% chance on the bull case continuing and about a 40% chance of a bearish move. Let's break down exactly what those two scenarios look like.
Okay, on the bullish side, we've got what's being called the Thanksgiving drift. In this scenario, the price just holds 90,000 as support and slowly, quietly drifts higher on low volume to test that resistance around 93,500. On the other hand, we have the turkey dump. This is where a big player takes advantage of the low liquidity to push the price down hard, hunting for all the stop-loss orders around that $88,000 to $89,000 support level before the real trend picks back up next week. Classic stop hunt.
So, the key things to take away from all this are pretty clear. First, hey, it's okay to enjoy the green candles in the holiday. This bounce is real and it's driven by some pretty clear technical factors. But remember, this recovery is fragile. The bigger picture is still one of caution, and most importantly, with holiday liquidity this low, stay sharp and please manage your risk. Don't get wrecked by a low-volume move.
And that leaves us with the big question for the weekend and beyond. Is this a genuine relief rally that's building the foundation for the next leg up, or is it a classic bull trap designed to lure in hopeful buyers right before another painful drop? Only time is going to tell. Stay sharp. Enjoy the turkey. This is Satoshi Macro, signing off.